Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel has declined somewhat. The domestic spot price of hot-rolled coils fell by 50 yuan per ton this week, while the price of rebar remained stable. On the macro front, the preliminary reading of the US S&P Global Manufacturing PMI for August stood at 53.3, exceeding the expected 49.5 and the previous reading of 49.8. The internal meeting of the Fed on Wednesday revealed that the Federal Open Market Committee has become increasingly divided on the monetary policy path, with internal disagreements over tariff impacts, inflation risks, and labor market conditions, highlighting the complex situation facing policymakers. Against the backdrop of market pricing in a rate cut for September, there may be a divergence from expectations going forward. Domestically, the sentiment of anti-involution has cooled down, and prices of some commodities have declined. However, supported by ongoing policy measures and the anticipation of production restrictions linked to the September 3rd Victory Parade, commodities such as coking coal and steel still have expectations of production curbs, providing certain support to their prices. On the industrial side, the weekly output of the 5 major steel products increased. With molten iron output remaining at a high level, production has shifted toward hot-rolled coils. HRC output rose by 96,500 tons this week. Meanwhile, after price declines, some electric arc furnace plants have cut production, leading to a slight reduction in rebar output. On the demand side, weekly apparent consumption has rebounded. Overall demand has performed not worse than usual for the off-season, with a weekly average increase of 219,700 tons. In terms of inventory, the pace of inventory accumulation for the 5 major steel products slowed down this week, with a total increase of 250,700 tons. The inventory buildup was mainly concentrated in social inventories, while no significant inventory pressure has accumulated at mill warehouses. Currently, absolute inventory levels also remain relatively low. In summary, the anti-involution sentiment is gradually cooling, and steel is operating relatively steadily during the off-season. Fundamentally, there is no major contradiction between supply and demand for steel, and raw materials are supported by high molten iron output. From a profit perspective, steel mills currently still enjoy sound profitability, and no significant pressure for production cuts has been observed. Due to the expected supply reduction of finished steel and coking coal related to the September 3rd parade, there is no expectation of negative feedback trading under the current inventory conditions. Looking ahead, there is no room for price increases for steel during the off-season for the time being, but there is cost support at the bottom, so prices are expected to mainly fluctuate. For procurement, buyers may consider increasing purchases moderately after spot prices decline. From the institutional perspective, recent macroeconomic disruptions such as the anti-involution trend and production cuts have intensified. Coupled with the high certainty of overseas interest rate cut expectations, the overall sentiment in the bulk commodity market remains positive. In the short term, after price corrections, costs also provide significant support. Therefore, the current price game is characterized by differentiation, with the market mainly in a volatile trend. To sum up, after the recent decline in steel prices, there is support at the bottom and prices tend to fluctuate. In terms of product categories, long steel products, steel billets, etc. are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.